Thank you for your patience, everyone. I think we'll go ahead and start now. Again, this is Ivy Baca, Vice President of Sales, and Eric Tran, CEO, will be the presenters today. We're going to discuss 5 essential things to look for in analyzing construction loan request. Thank you again. Oh, hi. Hi, Hans. I'm able to see your comments, and Eric as well is able to see your comments on the right-hand side. Any questions that you guys have during this webinar, please feel free to put them on there, and we're going to be discussing it after the webinar.
Okay, thanks, Thanks, Ivy. Hello, everyone. Happy Thursday. Hi, Hans. Okay, Ivy, go ahead.
Okay, so let's start with our first essential thing that we should know or we should look for in a construction loan request. The project cost. 3 things: the land cost, soft cost, which includes the entitlement, architect, engineering, and permit; hard costs, the actual construction budget. Number 2, the borrower's the borrower's equity contribution. How much cash the borrower put into the project already? We need to see that there's skin in the game. Did he or she paid off for the land, or is there still a lien on the land? Ideal borrower's contribution is 30% of the total cost, but can go as low as 20% for Tier 1 location and borrower with extensive experience. Hello, Kevin. I see you have joined us. Thank you. Number 3, construction costs breakdown. This is very important. It is it in line with the market cost? Some borrowers tend to inflate the construction cost to get a higher loan amount. This is the area that brokers should look for and note immediately. And number 4 is borrower's experience in the industry. Is this borrower's first project? More likely, there will be experience required. If it is, we need to have a general contractor line up so lender can review the contractor's qualification. However, lenders would ask for a minimum of 35% equity contribution from such borrowers. Number 5, our 5th one, which is also very important and not least, a borrower's asset, both liquid and non-liquid. Lenders normally want to see that the asset equals the loan amount. If there are any unexpected problems popping up along the course of the construction, then borrowers should have the financial ability to withstand. Last but not least, it's the exit strategy. What is the plan after the construction? Is he planning to sell? Is the borrower planning to refinance into a permanent long-term loan? This should be addressed at the beginning of the process. So now we're going to discuss guidelines for a construction loan. We're going to discuss rates, fees, terms, and the first one will be rate. Our rates usually start, which is prime rate above plus the between 2% to 4%, depending on the loan amount. I believe rates right now, the prime rate is at 5%, so it's above that. 2% plus 4%. In regards to term, there is a 18 to 24 months on all construction loans and must be paid off once the construction loan is finished. Borrower needs to refinance the loan into a long-term conventional loan program. Some lenders will offer a permanent financing rollover. Fees. fees. Fees can be between 2 to 4% depending on the loan amount, and it can also be added into the loan amount. There will be interest reserve collected. It could be between 12 to 18 months, and it could also be added into the loan. That will be all for the things that we will discuss. I will pass on to Eric right now. If we have any questions, again, please feel free to ask these questions on the right-hand side of your screen. Eric?
Yeah, I saw Kevin name. Kevin, you have any question, Kevin? Hello, everyone. If any of you have any questions, feel free to type in the question, and then we will happily answer you. Okay, none so far. So for on construction loan, I want to add one more thing. There are different kind of like construction loan. The first one is a spec home construction loan. That means developer builder only build a single family residence. Secondly is a multi-family construction loan, more or less apartment, and we move into like shopping center, industrial. So that is those are the different kinds of construction loan. Normally, the easiest one is the one that for like a single family residence. So Ivy, with your experience handling all the construction loans, normally what is a problem you tend to see or you tend to run into that you want to tell the audience?
Thank you, Eric. Oh, I'm sorry, I can't hear my I have been asked lately about borrower's experience, which is very important. In some cases, borrowers don't have experience and it's their first project in hand, or sometimes they have experience in investment and they have experience in flipping, but they don't have experience from ground up construction. So would you say, or would you even consider rehab or flipping into ground up construction? That's the first question I kind of get all the time.
So normally you run into like the scenario when like borrower don't have that much experiences, right?
Exactly.
So for this kind of situation, we as a lender normally look for the borrower financial capability. That means, okay, you can be a first timer, but you need to show strong financial balance sheet. Why? Because when you are first timer, no experience, you tend to make mistake, and mistake cost money. We want to make sure you have enough financial capability to take care of those problems. What other problems you run into besides like not enough experiences? What about asset, personal financial statement from the sponsor?
Yes, assets too. But there is another thing that I wanted to mention is that in some cases we have where the borrower has an existing lien on the land. More likely is if it's above 50% of the amount owed, then there's not much equity to work with and there's not much skin in the game, as we usually say, because assets will be obviously reviewed. What would you say about that in regards to land value to be considered?
What is your question again, Ivy?
What would you say if the borrower owes more than 50% on the land? How much would you want the borrower to have in assets or liquidity?
Normally we want the borrower to pay down at least 50% of the land cost, not land value. Because a lot of time we have this scenario, the borrower say the land cost is 1 mil, but now it's value 4 mils. We always go with the land cost. How much did you pay for it? and normally we want 50% of your own money putting into the land cost.
Okay. Yeah, I had a particular situation where they owe 75% of the value of the land as is value, and it wasn't considered because there was more owed to the land. Now, in regards to assets, what do you look for? How much would you say of assets they need to have?
We look at everything, liquid and non-liquid. Liquid means cash in the bank, non-liquid means like your real estate owned stock and bonds. So in a sense, we look at the overall picture. Then we can see how strong the sponsor financial capability is. We don't have any like specific guidelines that you must have this much money in the bank or how many real estate you must own. We just look at the overall picture from their personal financial statement. But normally we want the asset to be at least equal the loan amount. Ideally would be two times the loan amount.
Okay. I have Kurt here, Eric, on asking if we'll do a rollover into a permanent financing.
Yeah, we will do. But normally for construction lender, they just do like short-term financing, 12 to 18 months. But we can always arrange a permanent financing, the long-term lender, to commit into the deal early on. And usually with the early commitment from the permanent financing lender, your sponsor or borrower would have a better chance with the construction loan because the construction lender clearly see the exit strategy, who going to pay them off.
I see another question from Christopher. Christopher, he's asking ratios or ranges. I don't understand what you mean by that.
Ratios or ranges. Christopher, do you mean like the LTV or the LTC? When we look at the construction loan, the first thing we look is the LTC, the loan to cost. How much is the overall cost of the project, and how much the sponsor gonna put in his or her own money into the project? Normally, ideally, we want 30% equity contribution into the project, unless it is a very experienced borrower, very good location, tier one location. But like 30% equity contribution would be something you should be prepared for. And another thing we would look for is after the project is finished, what is a loan to value? We max out at 75% loan to value. So either 70% loan to cost or 75% loan to value. That's where our underwriter will come in and do all the math, all the calculation. But by saying LTC and LTV, this is what I see very often. A lot of time, borrower come to us just because they don't have enough equity contribution into the deal. They have like 10%, 15%, or 20%. So in such case, what do we do? It's a very complicated process. We will explain, not in this seminar, but like contact us for like options, or the option when you don't have enough equity into the project.
Okay, I don't see any more questions. I hope that answers your question, Christopher. If not, please let us know right away and we can go back to it. Kurt, I hope we did answer your question as well as you were asking it. If not, please go ahead and give us another message here. Oh, here's Christopher again. What geographies will you lend in? What states? We do nationwide, right, Eric?
Yeah, we do nationwide. We do like everywhere. But if it's in the semi-rural or rural area, be careful. We might not go into such area. What do we mean by rural or semi-rural? the city or town with less than 20,000 population. If it's too small, we tend not to go into it. Besides that, we provide construction loan everywhere.
Okay, and another thing that we should point out in the meantime while the guys are writing their questions, it's that for submission, the main requirements that we do look for, Eric, do you want to mention them?
Okay, first thing for the submission, the first thing we want to look for is the land cost. Um, for us to know about the land cost, we need the closing statement when you close the land. Secondly, we need a construction cost breakdown, the hard cost, how much it actually take to build. Then we're gonna look at like all the soft cost, how much it would cost for like all the engineering, architect, city fee, permit. Those are the things that we need to have right from the beginning to sign up the deal. And fourthly, we need a borrower sponsor personal financial statement and credit report so we know who the borrower is, how strong, how weak they are. Those are the basic things that we would need in the beginning in order to accurately size up the deal. I saw the question from Christopher. Transaction size, high, low. Minimum 1 mil, maximum 50 mils. That is our range. Okay, back to you, Ivy.
Okay, well, you just answered Christopher's question. I would say, what would the minimum FICO be required?
Normally we want to see the minimum FICO at 660. Below 660, we start getting into high money territory. We still do the loan, but rate gonna be high. For like prime plus two, I would say we would need like 660 FICO score. If it's less than that, 640, 690, we might look at prime plus four. Prime is 5% right now, plus four, which is like 9%. But besides, construction loan is short term, only 12 to 18 months. So 6, 8 or 9% is irrelevant because you only deal with the interest rate for like 12 to 18 months. The main thing for construction loan is not the interest rate, but get the loan amount you want. 9 out of 10 times that people come to us because they have the loan approved, but not at the loan amount they requested. They don't care much about 7 or 8 or 9% because they know they only keep the loan for 12 to 18 months. It has to be, it will be paid off. So it is factor into the cost of doing the project. But to get enough money for your project is a crucial question. Oh, this is good questions. Does borrower roll in the interest payment or make monthly payment? All construction loan has an interest reserve built in. Borrower don't need to make any monthly payment. The loan fee, the 12-month to 18-month interest reserve will be built into the loan. Christopher, Protect Broker, do we need a fee agreement and do your cap fee? Uh, your broker should have an agreement with their borrower in the beginning, to compensate for their work no matter where they place the loan with. And there's a cap in fee normally. I never see any broker that charge more than 3% loan fee on the construction loan. Maximum 3%, I would say. Okay, so back to like Christopher question. Do you have any problem with like the fee in the construction loan request? Like sometimes the fee is too high because there are 3 or 4 brokers involved. Ivy.
Yeah, I would say whenever there's a lot of brokers involved and there's a fee agreement detailing fees for each broker, that kind of kills the deal a lot of times, because borrowers, they don't want to, I mean, they're okay with fees and they're okay with rates, but when there's too many hits involved, it just kind of scares them away. So our fee agreement would include their fees on ours sometimes, correct, Eric?
Correct.
Okay, so just to avoid that many hits on a fee agreement. And then afterwards, an LOI, of course, the LOI will have the general fees, and not every detailed.
Right. So like to the broker, my recommendation is if you see the total fee for brokers, all brokers involved in the deal exceed 3 points, be careful. Be very careful because normally there's still the lender fees in there. And if there are too many layers of broker involved, the fee will be too much for the borrower. And we see a lot of time the deal get killed because the fee is too high, not because anyone charged a high fee, but like too many players in the deal. So if you see all the brokers involved in the deals, and if the combined fee is more than 3%, be very careful. This is a question from Kurt. Can you cross collateralize or the rental property in lieu of cash equity? We can do it, but we prefer not to. Not to, because there's all the things involved. But like if the project is good enough, the sponsor is strong enough, we will. But if you are first time developer, you are not really strong financially, likely we will say no.
I would go back to Christopher's question where it says protect brokers. Yes, all of our brokers are 100% protected. I had a question from one broker once and said, how do I feel comfortable sending you a deal and you not sending it or giving it to someone else? That doesn't happen on our side because we want to build that relationship with all of our brokers. So in case the deal has already come in by someone else and you bring it in, we'll automatically decline it because it has already been submitted to us by someone else. So all of our brokers, yes, are 100% protected.
Okay, so another thing I want to add in here, like for all the brokers that when they have a construction loan, first question you should ask is why this loan was sent to you? What is the reason? The terminology is we always ask what is a skeleton in the closet, if there are any. Sometimes, oh, I went to like my bank, they didn't offer me enough. My bank don't offer construction loan for retail shopping center. I am capped out with my bank. I'm limited at 5 mils, 10 mils loan allocation, and I'm maxed out. Always ask why. Why you have this deal? And that's how you pinpoint the problem way from the beginning. Some borrower might say, my bank want me to have 2 times asset of the loan amount, and I don't have that. So the question you always ask is, why this loan come to me? What is the reason? There's always a reason. If it's perfect, the borrower's private banker will handle it. It will not get to you. When it get to you, always ask the question, why? What is the problem? Ask the client, my FICO is too low, asset is not enough, location is not ideal for my project. Keep in mind, for like institution lender, bank like Chase, Wells Fargo, there are certain area they wouldn't go into no matter what. Like in California, East West Bank would not go into Riverside or San Bernardino County. That there's guideline policy, no matter what type of project you have. So always ask the question why. Any problem with the borrower, any problem with the project itself, any problem with the location, get that, and you are halfway in solving the problem of the loan. Mhm.
I
And
believe Christopher has another question here. Will you look at housing subdivisions?
okay, housing subdivision. That Chris, do you mean like borrow buy a piece of raw land? They're gonna subdivide it into like separate lots and sell the finished lot. If that's the case, we would do. We just don't finance raw land. But like if the entitlement in place, the offsite, we call it the offsite infrastructure is in place, we would finance the lot. Offsite infrastructure means sewer, electrical, plumbing, paved road. Then we would do.
Okay, I see Christopher has a lot of questions. Please, whenever you have a scenario, feel free to contact us, either Eric or myself, via email. Send us your
hmm
loan scenario. We can respond right away and let you know if it's something worth even looking at or
Right,
not yet.
right. Back to the lot loan. Okay, in construction loan, we call it horizontal or vertical. Horizontal, that means a piece of raw land, nothing. And 9 out of 10 times, lenders don't do horizontal funding. Vertical funding means all the permit is ready, ready to build. We call it shovel ready. That's vertical funding. So if you have a piece of raw land, but you secure all the permit already, then lender will land on such project. Okay, Ivy. Before we end the webinar, do you have anything to say to our audiences?
Well, yes, thank you everyone for joining us today. We really do appreciate this, and having any questions or anything else that comes to your mind after this webinar, feel free to contact us. I believe we can answer them in less than 24 hours, so that's not an issue. So thank you everyone. Anything you want to add, Eric?
That's all.
Okay.
So that's our contact information. Any question, feel free to contact us. We are more than happy to look at the deal, analyze it, and give us our opinion. Thank you, everyone, for joining
No,
the webinar.
thank you. Thank
Bye
you
bye.
everyone. Bye.